Hi legends, it's Iman speaking from AlphaPicks. I hope everyone is well. For those of you that are new to my channel, welcome. AlphaPicks is your go-to spot for value stock treasure hunting, as I like to call it. We're basically not here for hype stocks or stocks that are there for FOMO, or you've got stocks that are being promised to go to the moon overnight and end up crashing harder than your old internet speed. So we're not basically for that. We're here to find real gems, quality companies trading at steep discounts with potential for real upside. Now, before we dive in, just a very quick disclaimer because I am supposed to give this. Hopefully, I don't get shadow banned because I think in the last video I did forget to mention it. I'm not a financial advisor. This is not financial advice. Always do your own research or talk to a professional and never YOLO your life savings based on a YouTube video, right? So in other words, just do your own research before you dive in and buy any stocks. Cool? All right, cool. So what is the stock in question today? The stock in question today is Integral Ad Science, ticker symbol IAS. And for those of you that have never heard of IAS, that's fine. And what we can say, here's the big deal. IAS operates in the AdTech space. Think of them as a digital referee. So basically the job of an IAS, the company itself, is to verify that ads are being seen by real humans and not bots. And bots are becoming a massive issue with every platform out there, from banks to YouTube channels to social media profiles to Shopify websites. It's the bane of my existence as I do run a number of Shopify websites. Basically, they keep the online ad world clean. So they're the cleaners of the online ad space. Now, let's talk about the market beatdown on the opportunity. As of now, IAS trades about $8.40, but here's a bit of a juicy bit for you. Analysts are calling this for an average target price of $13, with some even claiming and aiming that the stock's going to go up as high as $18.90. That's basically 125% upside. We'll talk about all that shortly, but in summary, that's the kind of discount we love here on AlphaPicks. Basically bargain prices at premium potential values. So let's talk about my first screen here. I've got the TipRanks. TipRanks is one of the first tools that I use to look at the potential increase in growth of a particular stock, and anything above 20% for me is quite juicy. So TipRanks has given this a moderate buy rating with it says here IAS stock 12-month forecast of being $13.14. That's a 56% upside. That is massive. And you can see the highest price target's been given at $18. So it's looking very, very healthy indeed. Moving on to the next screen, let's talk about the financials. This is very important. I'll look at all this information before deciding to pull the trigger or not. The trailing PE ratio is the first item that I look at. This is not too bad. It's a bit higher than the sector median, but not too shabby at all. However, the forward PE should be always lower than the trailing PE, and in fact, it's lower here. The Seeking Alpha analysts have given this a strong buy rating. Wall Street has given this a buy rating as well, all looking pretty positive. Now, this is one of the items that I do look at very closely. The PEG ratio, and we can see that the PEG ratio is much lesser than 1. This is very, very low. What this signifies is a very steep discount. Again, this verifies my findings and all the investigation I've been pouring into the stock to find out whether it's discounted or not. And in fact, it is discounted. Let's talk about the PE ratio right now. You can see that the estimated 2025 PE ratio is 24.48, and it keeps going down. Every year it's going down, and that's looking very nice and juicy. I love these sort of numbers. Now, in terms of the ratings, the one I am most interested in is called the Wall Street Analyst rating right here. As I'm scrolling down, let's click on that again. There we go. As I'm scrolling down, the average price target is again $13, which is a 55% upside. This is very similar to the TipRanks price target that was given in the previous screen. Let's move forward to my favorite tool, Stock Unlock. You guys don't know what this tool is, please have a look at my description, the link's there. But the most important insights I'll look at is this section here where it says growth. I want to see that the revenue is increasing, and the revenue is in fact increasing. So this is looking pretty good. The free cash flow increasing, that's the second item I'll look at. It says very good. So another one that is a massive tick. Next one here, net income increasing. Net income's increasing by a very, very huge percentage. Again, not surprisingly, This is a very good rating. We've got the ROIC here, return on capital invested capital. Sorry, it's been marked as an average, which is not too bad. I like to see this as a good, not an average. But as long as we tick all the other boxes, we can definitely work with this. For those of you that are not sure of what ROIC is, return on invested capital, it's also known as return on capital. It's one of the most important metrics investors take a look at when they're analyzing a company or stock and its ability to generate returns for shareholders. ROIC shows investors how much profits the company's invested capital generates. It essentially shows them if the company is investing money wisely and getting solid returns on it. This is linked to management. So management is something that I look at quite closely. I want to know who is actually managing the company and how efficient is the management level when it comes to this particular company. The financial health is pretty solid. It's a 4.4 out of a 5, where the current ratio is looking quite good. So all in all, this is pointing in the right direction. Now, Stock Unlock has its own price targets. We can see that the average price target is not too far from our TipRanks and Seeking Alpha, $13.26. And this is a 57.9% upside with a high of 18.9, and 18.9 gives it 125% upside. So it's looking very good. Moving on to the next screen, let me just go like this. One of the items that I like to look at the financial health or the balance sheet of a particular company. I want to ensure that the total assets are greater than the total debt plus liabilities. So we've got the total liabilities here of 98 million. Let's just say for argument's sake, 99 million. If I was to add 99 million with, let's say, 28 million, just round it off, that's going to be much, much less than 1.17 billion. So their assets are amazing. They can cover all their expenses, all their debts, plus some. All is looking pretty good. Now, let me just double check because I need to make sure I'm not perfect. I want to make sure these videos are no longer than 10 minutes. I don't like long videos, as I'm sure most of you are quite busy. We're here just to provide the stock and all the key stats. Okay, let's talk about the moat score of this particular stock. Now, this is the only item that sort of, I wouldn't say worries me, but something we have to be very careful. This is a high risk, high reward stock. The moat score is currently given at 4 out of a 10. And what this means is that this is quite volatile. It's got there's a lot of competition in the background. So IAS has some competitive advantages. I've done a summary for you guys so you don't have to do a lot of crazy research. IAS has some competitive advantages, particularly in ad verification technology and brand safety solutions, which are critical for advertisers and publishers. However, it lacks a deeply entrenched moat compared to dominant players in the digital advertising ecosystems like Google or the Trade Desk. By the way, this is one stock that I like, and I've been keeping a very close eye on the Trade Desk, ticker symbol TDD. The AdTech space is highly competitive, and many of IAS's services are becoming increasingly commoditized or are being offered by broader platforms. Now, one of the items here says factors that weaken its moat, low switching costs. So this is a bit of a worry. The higher the switching cost, the less the clients are inclined to go and jump platforms. And this is one reason, for example, NVIDIA is a very solid company because there are very high switching costs. There are no strong network effects, unlike platforms such as Meta or Google Ads. IAS doesn't benefit from user scale driving value for other users, and it's got limited brand power. So this is all looking pretty okay. I wouldn't worry too much about this. Again, this is what I said before, a high risk, high reward stock. I look at the fundamentals, I look at the financials. If everything's pointing in the right direction, especially when we look at something like, going back here, when we look at the growth, the profitability, and most importantly, the net income increasing at this percentage, that is a no-brainer for me. So what do I recommend we do from here? I recommend you guys to, firstly, what's my price target for IAS? My price target is going to be exactly this, $13.14. Let's just say $13. And I would probably start with a small position. You guys don't want to obviously lose your shirt. This is a bit of a risk or risky stock. So a small position is recommended here. You guys can invest a tiny amount of your portfolio or your savings into this particular stock because I believe it has, again, a lot of high potential. And your risk tolerance is when you exit. If it goes up to $10, you guys will still make Yeah, that's a lot of money. You still make good on the stock. You make bank. So you can either sell it when it goes to up to $10, but the way I like to approach things, I don't have any emotions when I enter the market. I will be aiming for a price point of $13, but of course I'll be checking TipRanks, this tool here, for the next price target. So when it gets closer to the $13 mark, I will be looking at, okay, what's the next price target? Has it changed? Has it gone down from 13? Has it gone up from 13? And adjusting my profit taking based on the price target then and there. All right, gang, thanks so much for your time and watching this video. Please let me know your thoughts, your comments. Please don't forget to like and subscribe, as I aim to be providing you guys with a lot more videos of opportunities of undervalued stocks. If there are any particular stocks you'd like me to take a look at, please let me know. I'll be more than happy to dive in and share it with the rest of the YouTube family. And from here, I say happy trading. Let's make some money together as we continue this journey. Thanks and have a great weekend.